Should you invest in stocks or property? It's one of the most talked about investing decisions, and when you dive into the real numbers, the answer isn't as obvious as it first seems, because the investment that performs best on paper isn't always the one that actually puts the most money in your pocket. So in this video, we're going to break down how property and stocks have really performed, and which one is more likely to help you build long-term wealth in 2025 and beyond. But before we get into the numbers, there's something important to understand. Stocks are quick and easy. You can buy or sell them in seconds. Property takes more time. You're dealing with mortgages, tenants, legal work, and it's hands-on. Let's rewind back to the year 2000. Two investors, Sarah and James, each have £100,000 to invest. Sarah puts hers into global stock index, and James works with Let Property to buy a tenanted buy-to-let. He puts £75,000 down as a 25% deposit on a £300,000 property and uses the remaining £25,000 to cover stamp duty, legal fees and sourcing costs. Now fast forward 25 years. Sarah's investment grows at 7.65% a year, including dividends reinvested. That brings her total to around £630,000. James's property value grows at the UK average of 5% a year, so it's now worth just over £1 million. After clearing his £200,000 mortgage, James's equity sits at around £815,000. But that's not the full story, because James also had rental income the entire time. Let's say he earned a 6% gross yield. That's about £18,000 a year in rent. Over 25 years, that adds up to £450,000 in total rent collected. Even if half of that went towards mortgage interest, fees and maintenance, he still walks away with around £225,000 in net profit from the rental income alone. So overall, James ends up with over £1 million in value from that same £100,000 investment compared to Sarah's £630,000. And the reason property pulled ahead? Leverage. James only put in £75,000 of his own money, but he was able to control a £300,000 asset right from the start, using a standard 75% mortgage. With stocks, unless you borrow, which is risky, your return only grows based on what you personally invest. With property, you grow your return on the full property value, while rental income helps you cover the costs along the way. That's the last 25 years. But what about right now? Stocks have done well recently, but they're also much more volatile. Prices can swing up or down quickly, and for a lot of people, that makes it harder to stay consistent. Property, on the other hand, tends to move more steadily, and right now, the numbers are strong. The average gross rental yield in England and Wales hit 7.4% in Q4 of last year, the highest in years. The average annual rent has risen by £3,000 since 2022, now sitting around £15,400 a year. And demand is sky high, with around 12 tenants applying for every available rental property. Rents are rising, often in line with inflation, and unlike paper gains in the stock market, rental income is real money that lands in your account every month. But there's one more thing that's often overlooked, and that's your behaviour. With stocks, it's easy to panic when prices drop. One market dip and people sell at a loss, then buy back too late. With property, you don't have that emotional trigger. There's no live price feed, no panic selling. And funnily enough, that's what helps most investors stay invested, and being consistent is what really builds wealth over time. So which is better? If you want something completely hands-off and don't mind a bit of short-term volatility, stocks could be a good option. But if you're looking for monthly income, long-term capital growth, and the ability to scale using the bank's money, then property might just be the smarter move. And that's exactly what we help our clients do at Let Property. We've sourced thousands of verified, pre-checked tenanted properties across the UK, each generating strong rental income and backed by a proven track record of capital growth, and guide investors through every step from finding the right deal to handling the management long term. If you're ready to get started, check out the link below and you'll see thousands of tenanted properties we've listed, and you can explore what kind of returns are possible for your own investment. And if you're brand new to this, make sure to watch this next video where I'll walk you through exactly what to look for before buying your first buy-to-let.